Hello everyone, my name is Givmoma Guju. I'm a financial analyst at FundMe Capital. Today in this course, I'm going to show you how you can build a financial model for a listed company. In this case, we are going to build a financial model for Simbisa Brands, a company that is listed on the Victoria Falls Stock Exchange. So we are going to build this model solely for valuation purposes. So after we build the model, and then we will value Simbisa Brands to see how much it is worth. So we are going to build this financial model in 6 steps. So first of all, we will project the consolidated income statement. After that, we project the cash flow statement, and we're also going to build some supporting schedules which we are going to link into the cash flow statement, which are the depreciation schedule and the working capital schedule. And once we are complete projecting the cash flow statement, we will proceed to project the balance sheet. Once the balance sheet is complete, we will build the last supporting schedule, which is the debt schedule. So we are going to discuss more why we build the debt schedule at the end. So without wasting time, let's dive right into it. So as you can see, this is the Simbisa Brands financial model template. So it has got these tabs. We've got the income statement tab, the cash flow statement tab, the balance sheet tab, the depreciation schedule. This is now a supporting schedule. And we've got the working capital schedule, we have got the debt schedule, and the valuation schedule. So this is the DCF valuation schedule, right? So as you can see, at the moment we have got 2 years historical data. So this is the data that we are going to use to project the income statement, the cash flow statement, and the balance sheet. So this method that I'm going to show you in this course is a quick one. It will help you to build a financial model fast so that you free up time to conduct deep research or extensive research, and then you come back and tweak and change your assumptions. So the assumptions that we're going to begin with is we are building the model. They are subject to change after we derive insights from extensive research. But the most important thing is I always prefer to build the model first and then go on to conduct extensive research and then come back and change the assumptions. So to begin with, you may also want to take a look at the Simbisa Brands annual report. So it is from this report that I got the historical financial figures. But of particular interest to me is that in this Simbisa annual report, you get to find or search information to do with the operational highlights for Simbisa. That's operational performance. You get to see the volumes in some other vital information that can help you make informed assumptions and projections. And also you get to read the Simbisa management discussion in analysis, okay, where you get to hear what they are saying about future performance and past performance, what are their future plans, something like that. So that's where mostly you have to start looking at, right? So here you can see we have got financial highlights here. That's on page 4, and we have got a lot of things here. And then here under strategic performance review, we have got let me just zoom a little bit. We have got the chairman's statement, the chief executive officer's report. Okay, so let me just quickly go through with through this annual report with you, okay, and until we get to the section of management discussion and analysis. So here you see these are financial highlights, and you may also want to see group revenue grew by 22.7, that's almost 23%. And then we've got operating profit. We've got information to do with customers saved. So this is this is important information about customers. So you may need to highlight that and dig deep. At the moment, we are seeing that in 2023, customers saved grew by 17% from 53.8 million. That was in 2022. So you got to dig deep to find out what is really driving Simbisa's revenue growth. Obviously, this is one of the drivers, customers served. Okay, and then we can also get to learn about the number of stores that Simbisa is planning to open, and also take count of the ones that are already existing and running. And like here, you can actually you can actually dig deep Simbisa's performance by region, right? So in Mauritius, Ghana, Zambia, Kenya, and Zimbabwe, so that we can come up with near realistic assumptions. So yeah, basically that's some of the stuff that we can take a look at. And I also want to right, so now we are at the strategic performance review. So here, this is the chairman's statement. So here you get to read and hear what they are saying about their company. And you can also as well proceed to the chief executive officer's report. It will tell you about their future plans, how much they plan to spend in terms of capex, if there's such type of info, and you get to analyze and get to understand Simbisa by region. Okay, and then at the end of the day, make informed guesses or assumptions. So cool, basically that's what I wanted to show you guys, just for a quick analysis. So in some cases, if you are trying to, let's say, quickly analyze a company, you can just come to the management discussion and analysis, and then you can get an overview of a company's performance if you are pressed for time, right? So if, let's say, you don't want to build a financial model, things like that, so management discussion and analysis can be so helpful to you. Right, now let's proceed to so we've got this completed model that I built. So you can see we've got the income statement there, and we've got the cash flow statement, the balance sheet, all we are going to build all of these together. So without wasting time, let's get back to our Simbisa Brands financial model. Now we want to, so I just want to start by emphasizing good financial modeling etiquette, right? So it is very key that you always highlight the hard-coded numbers in blue. Only formulas must remain in black. Okay, so all of this data here, these are hard-coded numbers because they are not coming from a certain sheet or from a certain cell. They are not linked through from a certain cell or sheet. So but the formulas here, these are now formulas, so they remain in black. So we have to highlight all these other hard-coded numbers into blue. So let's just do that. So we'll highlight that. Okay, so just made an error, a mistake there. So let me just highlight that, and then I'll choose blue, this blue. Okay, just a moment, I think it's freezing, so that's fine. So let me highlight this again. So let me undo. That's Control Z to undo. So now the way I highlight is I just select a cell and then I hold down Shift on my keyboard and I press the downward arrow once, and then I press the right arrow once as well to highlight. That's to highlight revenue data for 2022 and 2023. And then I press on my keyboard Alt H F C. And then sometimes I may press M if I really want to choose a good color. So here I'll choose this color, and then I'll press Ctrl C to copy that, and then I'll highlight this, and then I'll press Alt ES to copy that to format, to copy this format here into here, and then I highlight here, and then I press F4. So let me just highlight that. Perfect. So I think I've got share count data. So these are a number of shares outstanding. So here I'll just press Escape to deselect the copying that I had done. Now I want to, let's come up with assumptions. Okay, so like I said, these assumptions, we start by coming up with some historical assumptions that we are going to use to project our income statement, right? So you may want to add a row on top of royalty and franchise revenue. So to add a row, I'll press Alt H I R, right? So here I will write year-on-year growth rate, right? And then I'll highlight that and then italize that, and then here I'll compute the year-on-year growth rate. So the formula is we take the current or the 2023 sale of goods figure, we divide it by the figure for 2022, and then we say -1, and then we press enter. So here we have to turn that figure into a percentage, so we press Alt HP to just turn that into a percentage. So since it's a formula, it has to be in black, so we have to change the font color there, Alt HFC, and then we change that into black. So we add as well a row here, so we say year-on-year growth rate, and then we italize that. So we divide the 2023 figure by the 2022 -1, then Alt HP, and then do change the font color there. Perfect. Now we also do the same for the total revenue. So we say year-on-year, right? Year-on-year, and then we take the total here for 2023, we divide it by that for 2022, and then we turn this into a percentage. So here you can see that it's we are seeing that revenue for 2023 grew by 23% from that of the year 2022. Now let's proceed. So here what we want to do is we want to express all the other income statement line items as a percentage of revenue, except for increase in allowance for credit losses, depreciation and amortization, interest income, interest expense. So we are not expressing that as a percentage of revenue, right? So let's just do that. So here we add a row just below raw materials, so we say COGS is a percentage of revenue, and then we italize that. So here since the revenue, the raw materials figure is in negative, we have to convert it into a positive by just after we initiate the formula, we put a negative sign. So that negative sign will multiply that negative sign on the raw materials figure and turn it into a positive. And then we divide that by revenue, right? So we copy the formula to the right by pressing Ctrl R. So here we turn that into a percentage, Alt HP, and then we change the font color like that. So here we compute the gross profit margin. So we compute the gross profit margin. So gross profit margin is computed as gross profit divided by total revenue, right? So here we are going to say equals, then we select the gross profit for 2022, we divide it by total revenue for 2022, and then we press enter, then we copy that to the right. So that's the gross profit for you there, gross profit margin. And then we say other income as a percentage of revenue. So there are many ways of projecting other income, but for this sake we are just turning it as to be as a percentage of revenue. So we are going to look at that in more detail in future. So for the time being, let's just proceed. So here we are saying that divided by total revenue, we turn that into a percentage, and then we change the font color, and then we say operating costs is a percentage of revenue. We italize that. So we divide that by revenue for 2022, and then we copy that to the right, and we change the font color there. So as for increase in allowance for credit losses, for now we just leave it like that. So let's just do that for the EBITDA margin. So we say EBITDA margin. So EBITDA margin, EBITDA stands for earnings before interest, tax, depreciation, and amortization. So it just shows us the profit that a company has made before accounting for depreciation and paying lenders and the government. Okay, so it's more like operating income or operating profit from operations. Okay, so but mostly what is mostly important is also the EBIT, which is earnings before interest and tax. So it really shows the income from operations, okay, as well, just the same as EBITDA, but the difference here is with EBITDA it's a section of the operating profit before accounting for non-cash expenses like depreciation and amortization. Okay, so we are also going to look in detail at that. So here EBITDA margin, we just say this divided by the total revenue, and then we turn that into a percentage, and then we've got the EBITDA, we've got the EBIT margin. So EBIT margin, so we divide the EBIT for 2022 by total revenue for 2022, and then we turn that into a percentage like that. So here, interest income, interest expense, we leave it blank. Even here, like we are not going to project that for now, and here we are not going to project that for now. So let's just proceed and compute the income tax rate. Right, so here we divide by EBIT, earnings before tax. Perfect. So here, that's cool. Right, so this layout that is showing right now is different from the one that you will find in their annual report. Let's scroll down there to their income statement. You'll find it so different with mine, and I'll explain why it's different. So let me just proceed. Okay, so here you see that they say operating expenses, so revenue from contracts with customers, other income, operating expenses, and then they've got operating profit before depreciation, amortization, and impairment. So the reason why I removed these other unusual items, to the bottom of the income statement is because I wanted to track the true EBIT, that is earnings before interest and tax, right? Because as you can see here this is EBITDA, right? But now if we factor in all these other unusual items, you'll find that it will distort our EBIT here. Okay, so I wanted to just track to have a true picture of the EBIT margin. So that's why I moved these other unusual items to the bottom of the income statement. So sometimes you may need to shift stuff, from certain sections if you find them not aligning with what you are trying to analyze or do. Okay, especially if a company lists unusual items, a lot of unusual items under operating expenses or just before EBITDA, then obviously you may need to remake the income statement and adjust it, so that you have a clear picture of what you are really trying to analyze and measure. Okay, so now let's go back to the income statement here. So you see here we have got fair value loss of investment properties. We have got and these are not normal these are not normal operating items. That's why I moved them down to the bottom of the income statement, and then I now have got a section that's titled adjusted profit for the year. So here I'll come and then I'll compute net profit margin. So here I'll compute the adjusted. So this is the adjusted net. So here I'll compute the adjusted net profit margin. Perfect. So here I'll come say this divided by total revenue, and then I'll copy that to the right. So we've got 8%, 7%. So I may also do that here. That's net profit margin, right, based on profit for the year, right? So here, so I'll just select the profit for the year divided by revenue for 2022, and then copy that to the right. So here I've got a constant 6%. Okay. So this is it, guys. So now once we are done with that, now we need to come up with assumptions based on these historical calculations that we've just done. So before we do that, I just want us to audit our formula so that we do not make unnecessary errors. So here I just also want to add a top border, so old HBP, so old HBP, old HBP, old HBP, right, perfect. And now it's time to audit our formula. So audit, you can press F2 and you can see these are aligning. So here you can just audit that. You can audit that. So we're seeing that it's okay. So we think that it's okay. So you audit by pressing F2 on your keyboard. Okay. So I think everything looks good for now. Audit. Okay. That's it. That's it. So here, if I audit that, okay, yeah, that's it. That's it. So let me audit this final one. Okay, so that's it. All right, so now it's time to come up with our assumptions. Right, so now we may want to just put some assumptions, right? So here I'm going to assume that Simbisa's revenue, like what I've just done here. So if I come here, open up the income statement here. So what I'm going to do is I'm just going to copy that and come back here. And I'm going to press Ctrl V to paste that. Okay. So here, these are my assumptions. I'm assuming that Simbisa revenue is going to grow by 5% in 2024. Given by the El Nino drought and stuff, things are difficult economically. So obviously consumption is going to decrease, and disposable incomes are so tight. And so I'm projecting that total revenue for Simbisa will grow by 5%. Okay, that's so like I said, these are just assumptions. Okay, and once I go back to do or conduct extensive research and I gather new insights, then I can come and change my assumptions. That's the whole purpose of building a model, by the way. And in 2025, I'm assuming that Simbisa will its revenue grow by 6%, you know, provided that we have recovered from the El Nino effects and in drought and stuff. Then in 2026, I'm assuming that it can grow by 7%. Okay. Then in 2027, 5%, and 2028, 5%. Okay. Now, for the COGS as a percentage of revenue, in my previous model, these were my assumptions. So I just want to paste that, and let me also paste my assumptions for for operating costs. So I'm just paste that here. And for this one, I think, let me just paste as well. Right. So for this one, for tax rate, my assumptions were 25% throughout, right? From 2024, that's the prevailing tax rate, corporate tax, corporate income tax in Zimbabwe at the moment, right? So basically, these are the assumptions that I'm going to, build this model based on. So on COGS as a percentage of revenue, they will be at a constant in 2024. That is, they will be at 45% before they decline to 42% throughout, and then 2% other income, and then operating costs 37% to 42%, projecting that they will be at around 41% before they decline to 38%. And increase in allowance for credit losses, so we are going to project that later. The same with depreciation and amortization, we are going to project that later. And interest income and expense, we're going to project that later. Then I think at the moment here, foreign exchange and other loss and gains, this is a difficult line item to project, so I'm going to put a 0 for now. And gain on purchase of subsidiary, this is also a difficult one unless we get more information and insight in the annual report. Then fair value loss of investment, that is also a difficult one. Derecognition, this is also a difficult one until we get a clue. The same here. So all these other ones, I'm going to project them at 0 for now. So we've got 0 for now, right? So here let's project our revenue. So now let's just project our revenue. So what we are doing is we are saying equals, we select the total revenue for 2023, we multiply that by 1 plus this one, and then we close bracket, and then we copy the formula to the right, and we do the same, equals negative, we select this times the revenue, and then we copy that to the right, and then here we copy the formula to the right. We also copy the margin here. So here other income, that multiplied by the revenue for 2024, and equals, and then we say negative, that multiplied by revenue for 2024. We copy that to the right. So here for now we leave it blank, and then we just copy to the right, and here we leave it blank, we just copy that to the right, and here we just copy this total to the right, and then here negative this times this, and then we copy that to the right, and then we copy the formulas to the right. The same here to the right, like that. Okay, so as we project the depreciation amortization, we are going to link it through here, and the same increase in allowance for credit losses, and then even this one, interest income and interest expense, we are also going to link that here in the income statement. So basically this is how we can get to project them. We can get to project the income statement. So before we complete, let's just compute the basic earnings per share. So this one, we just take the adjusted profit for the year divided by, we divide by basic share count, we multiply by 100 since we want it to be in cents. Okay, so here we just copy that. So here we are going to assume that these share counts will be the same throughout, and then we do the same here, divided by times 100, and then we copy that throughout as well. Perfect. So now we are done with projecting our consolidated income statement for Simbisa. So in the next section, we are going to look at the cash flow statement and how best we can project some line items in the cash flow statement. Okay, so stay tuned, and I hope you have learned 1 or 2, 3 things here. See you in the next section.